Hi, everyone. Just a reminder that I have a giveaway that's going on right now. I'm giving away 3 books by 3 podcast guests. Worry-Free Money by Shannon Lee Simmons, The Burnout Gamble by Hamza Khan, and Young, Fun, and Financially Free by Leanna Hawkins. So if you want to win that bundle of 3 books, just head over to bohumphreys.com/giveaway and enter. The giveaway ends on August 31st at the end of the day. If you're listening to this in the future and you've missed this giveaway, just head over to bohumphreys.com/giveaway anyway, because I probably have another one going on. I'm going to try to keep these up as much as I can, give away books from podcast guests and maybe other prizes and other awesome stuff. As long as people keep entering, I'll keep trying to give stuff away.
This is the Personal Finance Show.
Hi, I'm Bo Humphreys, and this is the Personal Finance Show. Boyce Collins doesn't want you to become house poor. As a mortgage broker, his responsibility is to get you the best mortgage for you. This isn't always the case when you go to get a mortgage from a bank. And the best mortgage isn't necessarily the one that leaves you strapped for cash if the interest rate changes by 0.25%, or leaves you with an empty bank account every month. If you listen to the show, you've heard me say this a bunch of times. Banks care about making money. They don't care about you. After talking to Boyce for over an hour, I actually believe that he cares about his clients. A house is usually the biggest purchase of your life. So for the biggest purchase of your life, it really makes sense to me to go see a specialist. Boyce currently works for the Personal Mortgage Group, a brokerage founded by his mom, Suzanne, in the early 90s. This brokerage is all about trust, integrity, and financial wellness. They have 92 5-star reviews on Google. So if you're in the Hamilton area, you should really check them out. But Boyce wasn't always the mortgage expert he is today. Here he is to tell his personal finance story.
Growing up, my mom and I moved around a lot, and she was a single mom, and we moved from Edmonton to Ontario.
Oh, how old are you?
I was 5.
Okay, so you were born in Alberta.
Edmonton, yeah. I was born in Alberta. And then when I first realized how completely brutally broke we are was when we were renting a place here in Hamilton, and we had to move in subletters into our apartment to sort of stay afloat.
Wow. How big was the apartment?
Not all that big, although it was one of the big old 3-story walk-ups here in town.
Subletters while you were still there.
Yeah, so that was interesting. And I think, it's not like I learned, I didn't know exactly what was going on, but I definitely understood, whereas, because it was a relatively affluent part of Hamilton, relatively speaking. And none of my friends had to do that.
Did you say it was the house that you're in now still?
No. We were renting. It's actually just around the corner on Charlton.
Okay.
The Charlton and Hess, actually.
Okay, yeah. So just down the street. We won't reveal my exact address to everyone, but
yeah, well, you can edit that out, right?
If you're a subscriber, you can just look it up at the end of the emails.
Fair enough.
Yeah, exactly.
Yeah, so I mean, and she had to work pretty well constantly growing up.
So what was she doing for work?
At the time? So when she moved out here, her sister, who had remained here, was sort of up and coming in real estate, and so she tried her hand. She'd always been in sales. She worked in retail, like kind of higher up in Club Monaco and things like that, out west. And so she's always been in sales. So she took up a real estate position, and getting started in real estate is pretty grueling. Yeah. In terms of the hours, you're working all the time. You're shepherding people around.
Well, how do you get started? Like, I mean, maybe you know a little bit about this. How do you get started? Like, some people are like selling the $1 million houses. How do you get to that point, or close to that?
Well, as far as I understand, because my aunt is still very much active.
Yeah.
I think she's got 35, almost 40 years in the industry now. From her perspective, it's old school grinding sales. These days, people will try to hook up with obviously larger brokerages and things like that. So you same back then. You kind of hook up with a brokerage, and then word of mouth through your friends and family. Get a couple listings under your belt. bench advertising, I guess. All
Yeah,
that
yeah.
stuff,
I've seen
right?
a lot of the benches around here.
Yeah. So, I mean, real estate's a tough slog, but it seems like it's like any industry. The bar is set, not any industry, but any industry in finance. Like the bar is set fairly low. The bar for entry is set fairly low.
Yeah.
But a lot of people think they see what kind of commissions you can make. And so they think, I'll just sign up for this, get my real estate license, which isn't all that much work.
That's right. Sell $1 million house and
take the rest of the year off. I'm going to Costa Rica or whatever.
Sounds great.
That's a direct quote from a real estate agent I was working with recently. A young guy. I don't think he's...
Did it happen for him? No.
No, it was a $250,000 house in Hagersville. So
Sure. I mean, that's not terrible though, right?
No, it's all right. But I guess the idea is that, like so many things, there's a culture of getting rich quick. Or not even quick, but that there are these sort of fast track or like easy ways to get money, and in my experience that's just never the case. Like
no, it might be short lived, right?
Certainly.
Like
I mean,
you could do it once maybe, but to think that it's going to be consistent, and then what are you going to do for the rest of your life? Right?
Well,
I mean, you're going to live off that
I
money forever?
You've got to keep working at it and keep building, I guess, in real estate in particular, you got to build your personal brand and all these kinds of things. But, the way it is, at least where we are here in Southern Ontario, it's like real estate agents are kind of a dime a dozen. And I think a lot of people are, if they don't get in with the right brokerage or with the right mentor, they're pretty, unpleasantly surprised by how difficult it is to actually make a living doing it.
So how did your mom do? Did she
did not do well.
No, okay.
No, at the time she's an very fiercely independent person.
Sure.
And so the idea of having to sort of kowtow to clients didn't fit with her personal sort of ethic. I think I'm personally a lot better at that. I don't mind sort of. Can you swear on this podcast?
Yeah, go ahead.
I don't mind eating shit here and there. Like I don't really have any kind of pride.
That's a plus in some ways. It's actually, I feel like it's a skill that people build, or if you have it already, like. It's really useful because everyone's going to give you shit. Yeah.
Yeah. And I mean, it's unfortunate. Like there's, at least I know from working in the mortgage end of things and having a lot of experience with real estate agents and things like that, there are a lot of big egos involved. But if you can sort of stomp that down or not worry about it or realize that your pride doesn't really mean all that much in that life, you can be fairly successul.
And you're going to be happier, people. Right?
Well, yeah, because you're not going to take everything to heart. You're not going to let people drag you down. I mean, you always want to care about people,
sure,
right? You always want to care about like people's impression of you because that's your business. You want referrals. You want to sort of build that brand or whatever. But at the end of the day, the pride can certainly get in your way as well, right?
Yeah.
And I mean, not just with clients or with like the consumer, but also like interpersonally with coworkers and things like that.
Yeah, pride can be really dangerous.
It's
bridges
horrendous.
Burned, and like some people just travel through just burning every business that they go through.
Certainly.
But okay, so where did your mom end up then?
This was early on in the whole sort of mortgage brokerage industry here in Canada. So mortgage brokering was not uncommon in the commercial sector prior to, say, 30, 35 years ago, just simply because, major banks would have a hard time sort of justifying the risk associated with lending against certain smaller projects. So if you weren't like a well-established builder, developer, whatever, you're not going to get any money from the bank simply because the risk was too high. Or you wouldn't have enough capital to even start. So private lenders would start, basically private citizens with a good amount of money to lend would take risks on building projects and things like that, new construction projects and that, and factories, whatever, cemeteries, like anything that was hard to get money for. And that sort of, at least it's my understanding, spawned the commercial brokerage industry. And then from there, residential sort of like straight to consumer mortgage brokering became kind of a service for people who, maybe had been bankrupt or who had damaged credit or unusual employment, that kind of thing. So you pay a premium to work with a mortgage broker to establish a loan for a house or whatever. And then over the years, people higher up at the banks, I think CIBC was one of the first. I could be wrong about this. Actually, don't quote me on any of this. I think CIBC in Canada was one of the first sort of banks to start becoming broker friendly.
Okay.
And they establish what I would now call kind of like an A side to brokering. So A, consumers, and by that I mean people who could walk into any bank and get a loan, would start to use mortgage brokers, and the mortgage because the mortgage brokers were purported to have a higher amount of expertise in the field, maybe be a little bit more critically minded and sort of outside the box thinkers, and also deliver a higher level of service than people were getting from the banks.
So the banks would delegate some of their business?
Yeah, well, I mean, so if I'll use CIBC as an example because they were kind of one of the pioneers. So you could always walk into a CIBC branch and get a residential mortgage.
Sure.
And then, it was probably somewhere on the corporate level that somebody saw this sort of trend of mortgage brokering and decided that they could funnel off or at least aggregate some business from outside of the branch level bank. So meaning that people who may not be CIBC clients would go to a mortgage broker and get placed with what they called a first line mortgage. So first line mortgages was the brokered mortgage division.
Okay.
And then, it kind of took off from there. I'm sure that if any mortgage brokers actually listen to this, they're probably going to be pulling their hair out because I'm probably missing a lot here.
It's okay. This is all very low level stuff.
Yeah.
You don't have to get the details right or anything.
Right. I didn't do any research.
But the concept being that people will go into the bank and the bank would say, you're not necessarily our cup of tea, but go over there.
Well, that was originally, but not even. But so like among brokers, then it was, like I said, it was more of a value add. So you would go, any doctor or professional, somebody with a good job, good salary, good credit, all that would still go to a mortgage broker simply because, the mortgage broker tends to handle more aspects of the whole process.
They're specialists,
right? Yeah, exactly. So they'll sort of stick handle the lawyer, they'll stick handle the lender. An increasing chunk of our business is coming from people who've already been, say, pre-approved at the bank or existing bank clients who are just sort of shocked at the sort of paucity of knowledge of the person sitting across from them.
For sure, because are they supposed to be mortgage specialists in the bank when you go in? Or
yeah,
are they
and I mean, again, I don't
multi-purpose?
want to step on anybody's
No, of
toes here,
course,
because I'm
but-
sure there's people at the bank that know exactly what they're
Yeah.
doing. But it's increasingly it's my experience that branch level bankers they're just not attracting the same kind of talent that they used to attract. Like, and not only that, somebody who's sort of selling you a mortgage in one appointment, the next appointment is trying to sell insurance or some kind of investment product or whatever. So, and ultimately they're really just given a list of products to sell and they plug information into a computer and then that computer spits out yes or no for a pre-approval. And, in terms of like their ability to underwrite a file and know all the, say in Canada, insurer guidelines, and then their own bank's guidelines, they just don't have that knowledge anymore. There's somebody sitting in a desk in Toronto who knows that.
Now we're getting ahead of ourselves a little bit, but can you just describe what underwriting is, like in the most basic terms you can think of?
Sure.
Because it comes up a lot, and I still don't have a full grasp of it, or maybe I do and I constantly forget.
Yeah, well, it's not. So, an underwriter, whether you're dealing with an insurance company or dealing with a bank, is essentially like the gatekeeper. So, in my case, or even if you're dealing with a bank, the person at the bank or the mortgage broker or whoever puts together the application, sort of explains in notes why they think this is a good deal and why you should give this person $500,000 or whatever. Yeah. And then the underwriter sitting at their office in Toronto or wherever it happens to be, and they kind of go through all the information, compare it to the check off the boxes of rules that they need to check off, and if it fits, then they're the person who approves or declines the mortgage.
Okay, so it's really the person or group of people who approve a mortgage.
Precisely.
And each different bank or company would have different, maybe some similar rules, but also maybe some more relaxed rules depending on who they are and what their rates are.
So in Canada it's pretty straightforward. I understand that it's a little bit more complicated in the States, but in Canada you've got your big five banks and then what we call monoline lenders, which are of the same class of mortgages. So we're talking, very qualified borrowers, excellent credit, excellent jobs, consistent employment, that kind of thing. So you have that level, right, where you're getting the best interest rates, the best terms and conditions, right? And then, for people who are, say, self-employed, who have difficult to prove income or perhaps have gone through a bankruptcy or have just been sort of like lax with their credit, there's a whole other strata of banks and lending institutions that'll deal with those people. Obviously, you're paying higher rates. In that case, they'd be charged upfront fees. And then you get down into like the private lenders, which is a kind of a whole other ballgame altogether. Right?
And that's
private
just people.
financing.
People usually know each other, and they assess their risk and charge higher rates.
Not even
it's not a shady business.
It can be extremely shady.
So some of it is shady, but some of it is legitimate as well.
There's 100%. I mean,
lenders.
The problem with this industry is regulated as it is in Canada, and that's wonderful. I mean, it's part of the reason that we were sort of protected from the crash in 2008 was because our banking system is much more heavily regulated. As good as that is, it's still kind of like I wouldn't say the Wild West in terms of private lending, but at private lending, it's like, if you're the consumer and you sign on the dotted line and you're signing up for unfavorable terms and conditions or something that's sort of setting you up to fail, well, you don't really have any recourse at that point.
Really?
You know, there's a lawyer involved.
Mm-hmm.
I mean, I don't know how. Like,
there always has to be a lawyer involved, no matter, and the lawyer might be shady too, though.
Well, I mean, again, I don't want to cast too many aspersions,
No, of
but
course,
I have seen it happen.
This exists,
sure, I have
right?
seen it
We're
happen.
not saying this is the majority or anything. It is out there. We don't want to say that.
I could honestly, like, if this was a horror story podcast, I could go on.
You got them.
Like, I've seen some horrendous things, but you know, I've also seen some pretty horrendous maneuvers pulled by major banks, too.
Yeah.
So, but yes, it's certainly a sketchier, you know, I'll use the word sketchier sort of environment to work in on the private side. That's, if you're ever looking for a good mortgage broker, if you need private funds, make sure you have a good mortgage broker who is not sketchy.
And so the difference between a mortgage broker, an official one, I guess, and a private lender, one with, say, a good reputation that just lends out private mortgages, what is the major difference there?
Most mortgage brokers are sort of mandated by the Ministry of Financial Services to act on behalf or in the best interest of the borrower. Okay. Whereas the lender,
is that fiduciary responsibility?
Yeah,
because we talk about that sometimes when it comes to investments. But
absolutely. Please. Now there are other types of sort of mortgage products where a mortgage broker can act on behalf of both the lender and the broker, and vice versa. But by and large, when you're talking sort of residential consumer mortgages, that we're all mandated to work on behalf of the borrower. So that's the major difference between the lender, the private lender, and the and the mortgage broker, is that, you know, we're supposed to be there to sort of safeguard the interests of the consumer.
I like that.
Yeah, and I mean, it's really written heavily into our course material when we're becoming accredited. You know? And especially not so much at the agent level, but once you become a broker, they really just hammer down on what your responsibilities to the client are. And I mean, I'm actually fairly impressed with the level, like, you know, but like sort of what our governing bodies do to sort of ensure that now. Because, you know, as an industry, we really want to, especially after 2008 and like movies like The Big Short and things like that, we really want to sort of reassure the consumer that, you know, there is a lot of value and a lot of protection built into our industry.
Yeah,
right?
Well, that's good.
And the more strict they make our industry, the more strict they make that oversight, the more confidence the consumer has in us, and the more sort of market share we can chip away from the banks who, as far as I'm concerned, when you're dealing direct with a mortgage advisor or whatever they're called at whatever bank you're at, they're not governed under the same rules as we are.
Interesting,
right?
Really.
And they are mandated to, well, not mandated officially necessarily, but it stands to reason that they're going to want to make as much money for their shareholders.
That's what we hear from the banks in general.
As possible.
So, right? It makes sense if they're a bank employee.
Yeah.
So this is how it is now, and we're going to talk more about this later. Now let's get back to when it was your mom's heyday. And what decade was this?
So she's been in business, I think, almost 30 years at this point.
Okay, wow.
Yeah, so that was really sort of in the earliest days of mortgage brokering. So the real estate company that she worked for here in Hamilton is Alec Murray, which is a sort of long gone, but at the time very successful real estate brokerage. And I might be getting this kind of wrong, but I think they opened up a mortgage sort of brokerage as part of their overall real estate brokerage, right? It was
makes
kind of
sense.
Like,
Affiliated.
Yeah, you can just funnel business from the real estate end right through the mortgage end. And so she became affiliated with them. And then I think that First Line Mortgages actually allowed brokers to work under their kind of branding umbrella as well. And so she developed a small sort of, I think it was in a plaza up on the mountain or something like that. She developed opened a little office there, and then promptly, I think I can't remember exactly how it went, but she ended up starting her own business after about 5 years of brokering underneath other businesses. She started her own company at that point.
And what are you doing at this point? Are you in high school? I
was still a kid. I guess I would have been elementary school, if not early middle school.
But are you absorbing any of this? Like, you're in the business now, obviously. Are you absorbing it as your kid? Do you know what mom does, and
I don't
starting to understand? Is she teaching you?
I think I had she didn't teach me per se, but I think I had like a reasonable understanding of what she was doing. I mean, when you're that age, though, it's like
whatever parents do.
I had no idea really what she was doing.
So, in terms of your first exposure to like money or anything, like, when did you start earning money?
I guess like my first actual job Well, no, I mean, I worked in like sort of in landscaping and things like that from a very early age.
Yeah.
So I went over to my uncle owned a small landscaping company in England.
Oh wow!
And so for the summers, she'd ship me out there.
You went to England?
Oh yeah. When I was like 12, I think
that's a first. Yeah. My first job was in England.
Yeah. I mean, I had worked on my cousin growing up. My cousins are all sort of family farmers, so I always worked on farms growing up before that. But I mean, it was unpaid. None of the kids got paid up there. We just took in like the hay and stuff like that.
And you're coming. So you said you came from. You were pretty broke.
Yeah, I mean, we were like I think again my recollection of it's pretty sketchy, but based on what happened in Edmonton, I think my mom had sort of like left a pretty good job, or was like it was a messy situation. It was a divorce, and all that kind of stuff. And I mean, in my business, you see people who go through divorces,
I'm sure you do.
That can it's crippling or can be crippling financially.
Oh, yeah.
I think she was kind of in that space at the time.
Okay,
and so
she kind of cut it. And it's like, and you had family here?
Her family's all from here.
Yeah, okay.
Yeah, my dad's family's all from out west, and so she moved out there originally to be with him.
So you two are here, and you have this knowledge of not having a lot of money, and maybe you're not even. So you're making some spending money in England.
Not even.
Sort of?
Honestly, like
No?
I think my aunt and uncle were paying me like £90 a week.
Okay.
To work there, which I guess at the time
did you have to pay for room and board or anything?
No. And they took care of me. It was basically spending money for the trip.
Yeah, okay, of course, because you're over there.
Yeah, I wasn't starting a savings.
And they flew you over too, or no?
I don't know. I'm
you don't
assuming
remember
my
paying
mom
for a
did
flight.
that.
Somebody else did.
Somebody else did. I was just a kid.
Was it just throwaway money then? You remember like saving any of it, building up a bank account?
No, and like full disclosure, like I never really was much of a saver. I just kind of lived frugally.
Yeah, okay.
I never made a ton of money. After I sort of consistently worked in the trades in summertime and things like that.
Yeah.
So I would always work for sort of local carpenters and things like that, just doing bitch work and then my first real job would have been, I guess, I think as soon as I turned 16, I got a job washing dishes at Kelsey's in West Hill.
So like with a real T4.
Yeah. And I remember actually going to that job and they'll be like, so can we have your social insurance number? And I'm just like, I don't know what that is.
I'm pretty sure I don't have one.
Yeah, I know 100% that I don't have one. I think they still let me work, which at the time, that's the 90s, right? So it's just like, I guess at the time they were like, well, roll the dice. Hopefully
it's
nothing
like
happens.
I have this like really like beaten down card in my drawer over there, right? That I've had since, well, I guess, when do we actually get the card?
I think you can get them when you're 14 or 16.
Yeah, whenever they actually, do they still send you a card? Do you know?
I think, I like, my memory is obviously bad on this because it was so long ago, but I think I had to go get one. I don't think I just had one.
Is it Ontario or is it Canada? I forget if it's provincial or not.
It's federal.
Yeah, okay. So if it's federal, so you would have you wouldn't have got one in Alberta because you were too young.
I was too young.
So they might have mailed you one but yeah, it's like something nobody really thinks about, but it's like so important for everything.
Yeah.
That's how they connect you to all of the things, all of the taxes and everything like that. And okay, so you're working at Kelsey's. You're getting so you did back of house then.
I was a dishwasher.
Did you ever do service?
No.
See, and that's everybody I talk to, like they work some kind of job in customer service. But you got out of that.
To this day, being a dishwasher was one of my favorite jobs. Like,
really?
I would go back to that in a heartbeat. I love being a dish pig. It was the best. I was really good at it. I loved like the sort of frenetic atmosphere of working in a kitchen.
Really?
Yeah.
Because this is the job that people hate.
I know. But I mean, most of the jobs I've ever had are jobs that people really hate. And I love them. Like, for the most part, there's not too many sort of like labor style jobs that I wouldn't continue to do.
Yeah.
Yeah. It's kind of like Office Space. Remember you used to see the movie Office Space?
Okay, yeah.
Where by the end of the movie, he's just like shoveling gravel and he's just as happy as he's ever been. He went from like a corporate job. That's basically me, except for I'm going the other direction.
So why do you think you didn't like go into that?
I don't know. I was a pretty like aimless teenager. I wasn't aimless. Like I was just, let's just say I had some like strong political views and
okay. Yeah. Gotcha.
And I don't know, like the idea of like, are you asking me why I didn't go to like serve it or like kitchens?
Well, no,
and things
like I mean, something that you have fond memories of this, but like any of the manual labor type stuff because you're not doing that now.
No,
or
but
maybe you are on the side.
Well, I am still quite a bit on the side.
Yeah,
I mean,
sure.
I worked I was a carpenter for about 10 years.
Okay, so
consistently.
You did go into it. Just you're not.
Yeah, I did.
Just not right now.
Yeah.
Okay, so let's keep going then. So you said you were frugal. but really no savings plan. Does that mean that you just had money in the bank, but you didn't plan to have it?
Yeah, basically. And I mean, once my mom started sort of becoming successful in her business was kind of, I guess I would have been around maybe 16, 17 when things really started to take off for her. And she like busted ass. Like I gotta say,
I was gonna ask, how does she do it? She just hustled.
She hustled, hustled really hard. Like I look at her sometimes and it's like it was sheer force of will.
Wow,
that made that happen.
Not gonna end up back in the situation from Edmonton.
No. And I mean, she was like, there was times when I was in elementary school where she was working, real estate or. Yeah, I guess it would have been real estate in the beginning, and then like she was a waitress at night,
Okay, so she was working multiple jobs.
She was working all the time.
Wow, okay. Yeah. So you're a teenager. You're probably mostly taking care of yourself at this point because you're old enough.
Yeah, so I mean, I was a pretty independent kid, so and I was on my own. Like I didn't have any brothers or sisters either.
Just the two of you.
So it was just the two of us. So she trained me to be pretty self-sufficient from an early age.
Yeah.
Once she started to become successful or a little bit more successful, I was kind of in high school. I didn't really give a shit about much in those days. I ended up getting an apartment with a friend of mine and before university.
Okay.
So I took a year off from high school. This was when they were still grade 13 or OAC or whatever.
Yeah.
And I worked in a wrecking yard for about a year and a half, like just earning cash. And
so
at that time, it was like, it just seemed like amazing money. Every week I'd walk out with a wad of cash and blow it. And
but you're saying you're blowing it, but you're not blowing it.
I was able to provide for myself.
Yeah, you're able to provide for yourself. Yeah. You always had money in the bank. In terms of like at that point, well, you're not. I guess are you 18 by now?
Yeah, I guess I would have been right about it.
But 18. no dabbling in the credit. Did your mom instill that into you?
No, like not really. I had a credit card, and I don't think I ever really used it. Again, because I was making cash, I just sort of always had a pocket full of cash. You know what I mean?
Yeah, that's awesome.
I was never making enough money to save. Put it that way. I guess that's the best way to put it. Maybe I would have saved, but with credit, I mean, I didn't really use it. I remember when I was in, I think like elementary school or something, I had my own library card and I rented a book, or I took a book out for a friend of mine for like a school project or something, and he never took it back, and I ended up in collections over a library book. Oh,
yes, that does happen.
I guess so. If you're asking what my first experience with credit is, my first experience was like maybe being like, I don't know, 12 and being in collections. And
you got a call.
Yeah, my mom losing her mind, right? Because she's just like, you're doomed to like, this is your first thing, like your first experience with credit, and you're already screwed up. So
I'm assuming you have a pretty good credit rating now.
Yeah, it's not bad. It's not bad. I mean, the credit's easy. Like maintaining a credit rating is easy. If you follow a couple of basic rules. And it's part of what we try to do, especially for first-time buyers or younger borrowers in the office. It's like, they don't teach any of this stuff in high school.
That's it. People don't know these easy rules.
Yeah. And I mean, at the end of the day, like we could go on and on about sort of the cultural motivations for why people spend the money that they spend and all that stuff. Yeah. But I mean, suffice it to say, people want to spend more than they have. And, at the risk of sounding sort of like a conspiracy theorist or whatever, I don't think it's a conspiracy. Like, we're trained to do that.
By the banks.
By the banks, by Hallmark, by consumer culture, right? Yeah. We are trained to spend money we don't have.
But we believe it. We believe all of this crap, right? Yeah. And this is a regular. It's unfortunately it's a topic that comes up all the time on this podcast because it's, like you said, the most basic rule, right? Mm-hmm. If people just like earn the money first and then bought the stuff, like you're talking about, you're flush with cash, you're not saving, which is fine. You're young. Yeah. If you were getting into credit at that point, then that's a problem.
It is a problem.
But what you're doing, otherwise, you're just living your life. Yeah. And it's everyone's decision to not save for the future or start later or whenever they want. And so no one really has an ability to judge that, right?
Certainly.
But I think we could totally judge you buying something that first of all, you don't need. With money you don't have. Yeah. And I just wrote a blog post about it.
There you go.
Yeah.
Yeah, well, and I mean, and that's just it. And I mean, like since I've sort of become more well established financially myself, once you have money, you start to think, or like, say a reasonable job or whatever, you start to think that it's okay, that you become more, my experience is you become more blasé with credit. Right? And it's like,
because you'll be able to pay it.
Yeah, I've got a line of credit. Okay, well, I'm gonna buy this whatever ATV or whatever it's gonna be. You know what I mean? Or worse, like the things that people blow their money on are outrageous, right?
Or just like trips, or even like bottle service or whatever.
Sure.
Right?
Yeah. Exactly.
So overpriced to me.
Well, and so but they think it's so normal to sit on a good amount of personal debt. And, due to the fact that we're not, or at least my opinion, due to the fact that we're not given any kind of education on what credit is and how much you're actually paying for what you're buying, you can sort of be oblivious to that. And so maybe you can service your debt. Maybe it's no problem for you in your lifestyle, despite the fact that you bought this big toy, your life, you can maintain your lifestyle on the other end of that. At the end of the day, you're still throwing, if it's a big enough toy, thousands of dollars away.
And like you said, it's your choice, and you can do that, and you think you're always going to be able to service it. And what I want people to be able to see is their possible future of now they can't work anymore and they can't service that debt, and then they go bankrupt, and et cetera, et cetera.
Sure.
It's a spiral, right? And it's because we have this belief that we're invincible, and it's nice, it's positive, right? I'm never going to get sick, nothing's ever going to happen to me. But we also have to think about the possibilities.
Well, it's interesting that you say you make that comment because it's kind of the psychology between the sort of boom bust economy that we live in, right? It was on Netflix, I think it was actually called. It was not Terry Gilliam. One of the Monty Python guys did like an economics 1 hour episode or something like that. And they were just talking about sort of the cyclical nature of the economy and how it is that we keep repeating these market crashes or market corrections, and that psychologists or I don't know if there's like psychological economists or whatever.
Behavioral finance people.
Sure. Yeah. Are looking, look at that. And it's just like, we have this as humans or as a group, we have this contagious optimism. And when things are good, we lose sight of the fact that things could ever get bad. And it's like, it's bonkers.
It's nice in a way.
Yeah, it feels good at the time.
That's great. Positive. Like, I love your positive attitude.
Yeah.
But not if it's not like going to be true.
Well, and I mean, anybody.
I'm an optimist. I'd love for it to, but I'm also preparing.
Well, you've got to be. You can be an optimist all day long, and I mean that's a great way to be. But I mean, you can also be a very sort of simple student of history and just watch what's happened. There's no way around it. Like, history does repeat itself over and over and over again. And it's, I don't know, to me it was so interesting because, like, in my end, to listen to somebody describe this sort of contagious optimism, because I see it every day I go to work. Yeah. Everybody's just like, this gravy train's never going to stop.
So they're like, I can afford this level of house, and because at this specific interest rate, and it's never going to change. Oh, because my house is going to go up by 21% every year. Yeah. So you've been in the business, in the mortgage business for how long?
Well, I've been licensed since 2008.
Okay. Yeah.
Good
timing.
Yeah. Yeah, exactly. Right. Yeah. 2008. I should add, at a time when there was 0% financing in this country.
Yes,
right?
Yeah.
And 35, 40-year amortizations.
I'm glad we don't have that anymore.
We don't, but we're darn close to it.
Oh man.
But I mean, 5% down is almost 100% financing.
It is, isn't it?
With your CMHC premium, you're basically putting 2.5% down.
You are.
Point.
Yeah.
Or less. Where was I going with that?
So you've been licensed 2008?
Licensed. Yeah. So basically I worked for, I think, about 2 years after I originally got my license, sort of on an official basis. I worked in the office on and off through high school and university.
So this is working for your mom's business.
That's right.
Yeah,
that's right.
And just to step back then, so to connect from when you're in high school, and you said you were a carpenter for 10 years?
Yeah.
How old are you?
I just turned 36.
Yeah. Okay. So basically your 20s, you did labor jobs and you're just living your life?
Yeah, essentially.
You're having a good time.
More or less. I mean, I hooked up with a partner when I was in my early 20s. I moved to Halifax.
Oh, you moved away for a bit?
Moved away, and was consistently working in the trades. I did work in the office for a while when I got back from Halifax, but I just wasn't in a place.
Stuff,
I was licensed.
Yeah,
I was brokering, and then I just was not. I was not an office worker at that time.
Yeah,
I couldn't handle it. I loved being in the trades. So I hooked up with a good builder here in Hamilton and spent another sort of 8-9 years with him.
Wow.
And it was a small sort of renovator, custom home builder kind of thing. And then, a couple of things changed in my life, and I just decided to make a change. And my mom made me an offer that was pretty lucrative.
That's nice.
So, and with, there's always like she really wants me to be a part of that business. Like she worked
Well, you're the
her ass
legacy,
off,
right?
Yeah, I guess so.
I mean, does she have other people involved for a long time who would take over if it wasn't you?
Yeah, I think so. I mean, there's the two guys that are in there at the moment. Just sort of chronologically, I'm the junior guy in the office, right?
Yeah.
So
You just happen to have the name. Or
yeah,
you guys have the same name.
Well, it's different, sort of. That's another complicated.
Okay, yeah, we don't have to talk about that, but yeah.
But yeah, so I mean, Chris, my one colleague, is he's been at it for like 7 or 8 years now, and he is top shelf. I mean, he's one of the most sort of creative brokers that I've ever met, and just, I mean, he's a real sort of creature of process, and he has sort of nailed his process.
So what does creative mean in terms of a mortgage broker?
Well, there's a couple of different things. Like, so I would say that the three of us in the office all sort of have a different both sales strategy and sort of deal strategy. Chris has got his process down pat, and he knows how to sort of work a file extremely efficiently.
Okay.
He's amazing when it comes to sort of customer satisfaction, and he's very attentive to his clients.
Yeah.
He's really good. He knows the sort of back end, or like he knows the math, I guess is a good way to put it.
Yeah.
So
that's probably one of the most important things.
Yeah. So if he's dealing with somebody who's really sort of engaged in the subject matter, he can explain, like he can give them a lot of confidence based on his skill levels. Then we've got my good friend Steve, who actually he's my best friend growing up. He actually got to the office before I did.
That's funny. Okay.
And because he knew my mom, and he was in a position where he was looking to sort of change industries. He's also an extremely creative broker. He can make a square peg fit in a round hole any day of the week, because if he believes in a file, he'll get it done, and he'll get it done at a good interest rate. And he grinds out deals in a way that I've never seen.
Because that's why people come to mortgage brokers now anyway, right? Or not necessarily, but because you guys do what you do well, but sometimes because they can't get what they want. Or the service that you're talking about, the service.
It's a service.
You can't get that at the banks.
Yeah, and I mean, sort of like the one big value add, and where Steve really, I think, excels in the business, is that he can, because he's so he's really, like I said to you, really involved in the music industry and things like that, and the arts, both here in Toronto and all over Canada, and he still is. So he's got a lot of connections in that field, but often when you're dealing with people who are in the arts, you're dealing with people who, if they're employed at all, are working, in an official capacity, are working contract, or working.
There's no steady income at all.
Exactly.
Yeah, exactly.
I mean, and so, he can take those people and basically use his critical thinking skills to convince lenders that, hey, look, these are good borrowers. Just because they don't fit into your sort of model of what, real employment should be, which is becoming absurd anyway.
Yeah,
this idea, everybody's going to be a salaried, full-time, benefits, all the rest of it.
I'm not that. I was that.
Most people,
right?
and I wasn't that for my whole career up until this point.
Yeah, that's right.
I was an independent carpenter, right?
Yeah, and with no debt and cash flow positive, and still they would frown upon it.
Of course, yeah. I mean, I was showing zero. I was writing my income down to $25,000 a year.
Yeah.
You know what I mean? I was probably clearing 60 or 70. That's one of the benefits of dealing with a good, an actual broker like that. And Steve actually said, his line is that's the difference between, banking and brokering. A broker has skills that you're never going to get at the bank. Right? Yeah. The bank, our line is computer says yes, computer says no. That's what you get when you go to the bank.
A broker is a connector, right?
Yeah, exactly.
That's the whole idea, right?
Yeah.
And to me, because I've always been in connecting jobs, right, between the music business and finance, right, between, I guess, finance now and the public,
right?
Right, because finance can be really complicated.
Sure.
And so I kind of understand a little bit about what you guys, that part of what you guys do as translators, right?
Yeah.
You're translating it to people who only understand policy and, this person has to fit this mold. And you're taking everybody in reality, and trying to convince the person that they do fit the mold. Yeah. And that sounds challenging.
It is. It can be extremely frustrating. It was personally, that's one of the things that I struggled with the most when I came back into the business, because I had so many years of sort of carpentry under my belt, where the beauty of the trades is if it makes sense. You can do it if it makes sense, right? This may not be a conventional way of doing something, but you have to solve problems all the time. Right?
There isn't one specific way to do everything.
So in brokering, it'd be really frustrating for me in the beginning, before I would have been able to hone that craft and really know what I was talking about. about, to run into so many roadblocks from the bank and being like, why don't you guys see the potential of this person? Or not even the potential, like the reality of this person, just because, their T1s say this and they're not able to provide you this stupid document. And like on a personal level, that was really hard for me to get used to, having to work in those boxes. But once you know the rules and you become a little bit more creative with it, and sort of you really have to put yourself in the head of the lender and the way they sort of profile risk. And once you understand what red flags they see from the file that you're submitting, you can mitigate those red flags. Like you can sort of head those off at each pass.
Because what's your goal? Like you've already made a risk assessment of your client personally.
Yeah.
And now you're trying to convince them of that, but you won't accept somebody if they're past your risk assessment.
Absolutely.
But that's a little more.
But that's
arbitrary?
It is arbitrary, because there are brokers, and again, there's like any industry, there's good and there's bad, and and the terms good and bad are relative as well.
Yeah.
But there are brokers out there that'll make anything fit by hook or by crook, and part of when I was talking earlier about the regulation that we're under, why we're such proponents of all this additional regulation, is because it weeds these types of people out. Because at the end of the day, these risk profiles, even if you don't like them, exist for a reason. Yeah. Right. And they exist not only to protect the banking industry from a 2008, but they also exist to protect clients from default and bankruptcy and financial ruin.
And that's what made everything crash in the first place.
One of the big reasons. Yeah.
They got rid of those
safeguards,
the measures.
Yeah.
The 0% 40-year mortgage, but also wasn't it a relaxed, like they gave it to people with lower credit ratings?
Well, in the States, my understanding of what happened in the States is, relatively comprehensive, but I'm sure there's holes in it. And the biggest issue in the States, and I could be wrong about this, but my impression of it, at least on the mortgage side, because there was other things going on the back
I have a whole
end, right?
thing
In terms
about
of in terms of like bundling investments.
Yeah, that stuff
like
we can talk. That we don't have to talk about that.
But
on the mortgage
on
side,
the consumer side of things, my understanding is basically that the regulations weren't there. Like the sort of the rules, the guidelines weren't there for weeding out risky borrowers. So, for example, they'd have a stated income program. We have that here. Right. Okay. So it's extremely hard to access, but we do have a stated income program where it's just like, you have unconventional employment, you're say a day laborer or whatever. Yeah. As the bank, I think it's reasonable that a day laborer will make X amount of money. Yeah. So we're going to use that as your income.
And they're saying, I trust you? Is that basically what they're saying?
So they literally had forms, stated income forms, where you would state your income, sign it, and it's like, well, you signed it.
That's it.
So that's your income.
Without any vetting at all?
So at first it was like, okay, we'll do the stated income thing, because they had an understanding that there were people out there who, weren't showing nearly 100% of their income, right? So they were like, fine. But you have to back that income up with assets. Okay. Right.
Oh, I see.
So they were like, oh, okay. So it's like, well, I may not be able to prove my income, but I can show you that I've got $300,000 sitting in a bank account. Yeah. Right. So I'm not going to default. The odds are I'm not. So you're like, okay, fine. We'll buy that loan. The bank is basically like, we will purchase that loan.
You seem like you're good for it.
Right. And then once, all the red tape, once they started breaking through all the red tape, they started coming out with stated asset programs. Okay. So you had your stated income where you could just say, I make $100,000 a year. And then stated asset programs where you say, I got all this money, so don't worry about it. I'm good for it, right? And, I don't need to sort of express how crazy that is. Right? But banks were making money hand over fist, and brokers were making money hand over fist because they could get anybody a loan for way more than they could afford.
Oh, no.
Right? And so from there, so that's one piece of the pie. So maybe that wouldn't have been an issue. If, this person's just like, maybe on paper I can't qualify for this, but I know that me and my family, we're going to make this work. Yeah. Right.
Which is a lot of people.
Which is fine, assuming interest rates don't go up. So suddenly you're qualified, and I'm fuzzy on this, but my impression was that, and I could be wrong, like I said, my impression is that a lot of people were taking variable rate mortgages because they were super low at the time. At pre-2008, they were like, they were almost at negative interest. It was crazy.
Is that why you would take a variable?
Just brokers, whether out of ignorance or out of just sheer, cutthroat sort of capitalism, were saying, didn't give a shit if they were going to go up or not, right? And maybe the brokers didn't even know themselves what they were actually selling. I don't know. But at the end of the day, you have all these people in variable rate mortgages. All of a sudden, interest rates start to creep up. If you're already extremely heavily leveraged on your mortgage payment, right? Here, we look at an increase of 0.25% in the key lending rate, or the bank's lending rate. And I mean, people lose their minds, even though it's the difference for the average mortgage of like $40 to $60 on a payment.
Yeah.
Right. You know, most people could absorb that.
That close, right?
But in the States, if they're already, you know, like, I don't know if you've ever talked about like debt servicing ratios on here, but if their debt servicing ratios are already pushed, like maxed out or beyond, well, they can't withstand any fluctuation, any upward fluctuation in interest rate.
Let alone any change in their personal situation.
Yeah, I mean, forget something. What if somebody gets sick? Like, what if somebody loses a job?
Yeah.
Whatever. You know, what if a partner dies and now you're a single income, or divorce, whatever, right?
So when you're seeing clients, that's top of mind. You want to make sure that they can not only service, but really pay this thing down.
Well, and thrive, right? I find that our business, for you know, on a personal level, our business seems to attract a certain type of client for the most part. I get something in the way that we market ourselves or something. We're looking for people who don't want to be house poor. For one thing. People with responsible borrowers, people who want a good life, right? Mm-hmm. And that's trickier and trickier in a market like Hamilton, where property values are so high.
It just continues, right? Are we caught up to Toronto?
Oh, well,
getting almost there.
I mean, I don't know exactly. I mean, we're kind of a different market still than Toronto, right? But I mean, in terms of property values, we're still well under Toronto.
Yeah, it depends on what part of the city, but certainly, like around here, I feel like it's creeping up to.
It's getting there. I mean, I'm seeing $1 million sales now that would have been $500,000 5-6 years ago.
Yeah, wow.
Right. So it is pretty bonkers here, but so our whole model is basically, you know, this is what you can afford on paper.
Okay.
And the way banks qualify mortgages, like they hold them, the banks and their sort of regulators hold themselves up like this sort of pinnacle of financial wellness for Canadians. Well, that's absolutely not the case. Max debt servicing is 44% of your monthly income to service your mortgage, your property taxes, and your heat. Right. Well, they say heat. They say heat utilities or whatever. Yeah, they budget $100 a month for heat and utilities.
Yeah, that's not true.
My internet's $100 a month. Forget about everything else.
Yeah, exactly.
You know, and all mortgages are qualified on your gross income.
Yeah, nobody makes their gross income. I don't know why we still do this.
So when I'm seeing clients, and we're all like this in the office, we're like, I can get you a $700,000 house, and I'm maxing out your debt servicing ratios, which I'm allowed to do.
Technically,
but those debt servicing ratios are based on utilities, like hard costs that don't exist, and an income that you're not actually earning. Right.
Yeah. So really, I mean, you don't want anyone to default. Because what happens to you if somebody can't pay their mortgage?
Well, nothing happens to us specifically.
But
it doesn't reflect on us.
No, it doesn't reflect on you. But then I guess the question is, how do you make your money?
Oh, we're paid by and large because we're the type of brokerage who handles, you know, anybody, the type of client that could walk into any bank. We're compensated a finder's fee from whatever lender we place the mortgage with, and the finder's fee is a sort of a fraction of a percentage of the mortgage amount.
So you're paid upfront then.
We're paid once the file closes.
The file closes. Yeah. So if somebody defaults, you don't lose any money.
We're paid.
Wow. So you could even go the complete opposite way and max people out and not care.
Absolutely. And we're paid more to max people out.
Yeah. Yeah. See, this is good. I like this because, you know, it's similar to like a bankruptcy trustee or, you know, anybody who's sort of regulated is, you could just totally take advantage of somebody and, you know, get more money. But you make the choice to sort of balance, right?
Well, it's bad business. I mean,
it is.
You know, like obviously we have like we're human beings with souls, and we need to sleep at
Some
night.
people aren't though.
Well, it's true. There's a lot of people in finance that go into finance to get rich and get rich alone, right?
At the expense of others.
Of course. Well, that's the whole financial system is set up to.
Somebody's got to lose.
Of course.
Payday lenders for one.
Don't even get me started.
You know, like because I've done lots of stuff on that, but it's like okay. You know, I could take the positive aspect of, you know, just like the positive aspect of maybe a better private lender would be that you don't have to go to the shady ones.
Yeah.
Same thing, you don't have to go to the black market you get a payday loan instead because
Yeah.
you're not paying, 1,000%.
Honestly,
you're
I
only paying
think
600.
half the time I think I'd rather go to the black market.
Yeah, I
when
know,
when you
right?
really dig into payday loans,
Yeah.
I mean, it basically is the black
Maybe there's more of a because there's more of a threat,
The
right?
physical
If your
violence,
legs
yeah.
are going to get broken, you're more likely to pay the debt. Otherwise, the payday lenders, all they're going to do.
Honestly, a broken leg is actually probably easier to deal with than what you have to deal with a
oh
payday
my God.
lender.
Yeah, just it never.
I'd
ends.
rather just take a quick broken leg, recover from that.
I forget the stat now, but when I had Doug Hoyes from Hoyes Michaelos on, he talked about how many people who come in for bankruptcy or consumer proposal, which I've gone through in the past because of a gambling addiction, but they come in with they probably have 5 or 6 payday loans, from different payday lenders, and it's a pretty hefty amount.
It's
because there's nowhere else to go at that point.
Yeah.
How are you gonna pay this off, right? And the worst one I've heard was people can go in with their CPP and OAS checks and get a payday loan.
Yeah.
And it's not even a paycheck.
Yeah.
It's it's never going to change. That makes sense. Yeah, right. We shouldn't get into this because go too far.
I could go on and
too
on.
far.
Yeah,
but
we
the
could
point
totally
is,
go on a tangent on
you're trying to save people from this terrible stuff that we're talking about.
Yeah, well, and I mean, even for younger borrowers, like whether you're a professional, whether you're in med school or you're a retread tires for a living, it's the same advice I would give to both people. But yeah, and it's not that difficult to sort of keep your family or your own personal finances, at least on the debt side of things, in check. But from our perspective, you're asking, we could certainly profit. We could do higher volume with larger mortgages and just kick people out the door. But, we're kind of in a somewhat closed market here, like a closed ecosystem.
Yeah.
We would burn ourselves out of clients
I feel like
if
you
we
would.
did that.
Was this
right?
your mom's policy early
Absolutely.
on?
Yeah, absolutely.
Is this how she got to be so good?
Yeah. Yeah, 100%. And that's how she sort of garnered her reputation. And that's how our company, she was basically on her own until about 8 years ago. And she's been at it for 25 plus years. She was a one-woman show for that whole time. It's only been in sort of the recent history of her business that she's actually had people under her that she could trust. And she did sort of burn through a couple of people that had that mindset.
It's hard to trust, right?
Of course.
And
it's her name. It's her business.
That's
you know
right.
what I mean? So it's she really came down hard on anybody who seemed the slightest bit unethical. She was, you're out the door, which is why it was so hard for her to get employees, get people to work.
Is that, other than the offer that your mom made you, is this what drew you back into the business? Does this feel like something that you want to be doing?
I wouldn't even say that it's necessarily what drew me back into the business, but it's certainly what keeps me in the business.
Yeah.
Right? There is a good deal of satisfaction to be had in my job when I know that it's one thing to sort of put a young, happy professional couple in a house. That feels good.
Sure.
But what feels like the best for me is when I've had people who have gotten either bad advice or they've screwed up their credit or whatever, and I kind of hold their hand for a few years, and we do, in some cases we got to do the if they already own a house, we've got to do the private thing for a year. Then we got to do a B lender for a year. And then finally, after a lot of hard work on their part, mostly, and advice from me, all of a sudden they're killing it.
So you have a network of people that you can, other professionals that you can refer people to if they don't.
For sure. On the private end, yes. Yeah.
So you have people on the private end who, and that means that they're higher interest rate than you.
Yep.
But they probably meet your ethical standards.
Yeah, exactly. And I mean, I can protect it. If I'm reviewing the contract, even if it's a shady lender, I can protect that borrower from the lender. At the end of the day, all you need to do is pay your mortgage, and you won't have any problems.
Really, it seems so simple,
right? But the problem is the private lenders get shady when you've got a mortgage broker, a private lender, usually a shady lawyer, and usually a shady appraiser, all working together.
So
those people are that's fraud. That's straight up fraud. It's straight up criminal activity at that point. And I mean, and I can say this guy's name because he's been charged, but Dennis Kenno was a prominent I don't want to use that word, but he was a notorious mortgage broker here in Hamilton for about the same amount of time as my mom.
Really?
And she knew him, and the guy was a snake from day one. Wow. And I've run across a couple of his files have crossed my desk where people are been locked out of their house, for non-payment one time. But I mean, I review these contracts and I'm like, there's no way you could have ever paid this. He has set this thing up so that the minute you screw up, he can change the locks on your thing. And then guess what? His wife's company. So, his quote arm's length unquote company then repossesses your house and puts tenants in it. Like it goes.
And this is somebody who has the same license as you have.
Yeah, and has been working in it for about the same amount of time. And I mean, but you get to that level in my industry, and you see a lot of shit. Like there's a lot of. We try to obviously avoid even like touching that environment, but you can't help it. It's a small enough city that you run into this stuff.
But they take these people down. You said this guy.
Yeah, it took 30 years, and God knows how many families he destroyed.
Yeah.
You know what I mean? This is, on the other end of all of this, the whole system is not made up to sort of benefit the consumer, right? That's why I think mortgage brokers can have real value in society. Yeah. It's not just about getting people a good interest rate. Although for most of our clients, that is what it's about. Good interest rate terms, good terms and conditions. It comes down to that,
but the added value.
But I mean, without having that sort of like person who's working on your behalf, like you can really, I don't know, you can really screw yourself up because nobody knows the finer points of these things.
And it's so important. It's always the biggest purchase you're ever going to make. I mean, nobody goes around buying other bigger things in the house, and unless this is what you do on the side. Yeah. So somebody, if they have a mortgage already, they can come into you and maybe second opinion. Do you do that?
Yeah, I mean,
or if they're up for renewal, how does it work?
Same thing. So all right, so the basic, I guess 3 categories would be first time buyers, right? Obviously, you've got people whose mortgages are up for renewal who are looking to either switch lenders to find a better interest rate, like you say, get a second opinion. Yeah. And then you've got the people who might be in trouble with personal debt. Okay. And they'll come to you and look at breaking their mortgage to suck equity out of their house to refinance. Those are often the most satisfying deals. You hear all the time that bank economists and Bill Morneau and all these people don't like that Canadians are using their homes as piggy banks, et cetera. And I don't like that either at heart. Yeah. But at the end of the day, a common refrain in our industry is like, debt is debt is debt. If you've got $150,000 in consumer debt, and believe me, those people exist, and we're not talking about wealthy people.
And we're talking about credit cards. Like at 15-20%.
Exactly. Yeah, use your house as a piggy bank and pay that off at 2.5%.
Yeah, please. Like if you're already in it, if you're already in the
you've already taken on the debt.
Yeah, but the careful thing there is, how do we know they're not going to just repopulate that?
Well, I mean, that's the wild card. I mean, we can only advise. I can't. Nobody can babysit these people. Nobody so all we can do is give them the best advice possible on how to maintain pay off that refinance debt quickly. Sure. Because it's it's all well and good to roll it into your mortgage at 2.5%, but if you're amortizing that over 30 years, then it's pointless. No, So pay it off quickly, and B, avoid getting in that situation in the future.
Do you ever refer people to counselors? Is that something you've ever done?
We don't really touch that end of the business too much. Usually, unfortunately, but by the time people have gotten to that point, we're usually the next call. Okay. And I mean, I could go on about sort of the trustee, the bankruptcy proposal business in this kind of, like, in at least, I don't know if it's provincially regulated or what, but at least in Ontario, as I understand it, it's certainly a necessary service. But I see a lot of people who are sort of like wounded by it too, more than they need to be.
There's a lot of different ones. Like I work with a really great one when I did my proposal, and I think Boyce Collins has a great reputation. Mm-hmm. They have offices all over the province, but I know there's a lot of competitors. And I just had Laurie Campbell on from Credit Canada, and they're a nonprofit. They don't actually do any of the trustee stuff, but people can come in and talk to them.
Well, that's what they need, because there people do, as you know, people get to a point at like a financial sort of cliff edge where that's your only option. And I have advised people to pursue that, right? Where I'm just like, there's nothing I can do on my end. Yeah. Right? I can't even get a private lender to look at you. You need to fix this first. Yeah. And I think when I originally met you in my office, I think I said something to this effect. They need to be advised properly at that time, because if not, I've had people that are 4 years out of a proposal discharge, and they think they've been doing everything right the whole time, but they got one piece of bad advice and they're starting the clock over again.
Really?
Not that they're going back into proposal, just that they're still not ready to buy by bank standards.
Yeah, and I mean, it took me, like when I got on my proposal, it still took another year. Sorry, it took 2 years, of course, for it to, 2 years for it to clear, and then they wanted another year after that before anyone actually looked at anything, because it just looks like a blank space.
Yeah, well, and I mean, so just, for anybody who's listening, this is the rule of thumb for coming out of a proposal. Usually it's 2 years now. Maybe it was different when you did it.
Yeah.
The standard right now is 2 years clean repayment. And this is what screws most people up. 2 trade lines. So 2 active pieces of credit.
Interesting.
For 2 years.
I had one. Yeah.
Right. So
like even if it's
how long ago
secured.
How long ago?
So I paid off my 2012, I think I paid off, and then I think it was 3 years then. It would have been cleared by the summer of 2015.
So I wasn't in the business at the time, so I can't really speak to what the criteria were at that time. Now, I should say that I'm talking about A-level financing. I'm talking about big bank financing.
Yeah. Okay.
Not like, there's
there's
all kinds of lenders. There's lenders that'll deal with people who are still in
proposal. If I went to Scotiabank and I wanted a mortgage,
exactly.
they're looking at.
So anybody who's wanting to access those types of funds, it's these days anyway, and this stuff does change pretty frequently. But these days it's 2 years credit rebuild, right? The 2 trade lines, and by that, so we're talking, a trade line would be a credit card, line of credit, vehicle loan, student loan, whatever.
Yeah.
But the kicker is banks really prefer revolving credit when they're determining your credit character. So everybody's like, well, TD gave me an auto loan. Well, it's like TD will give like your mom's pet.
Yeah, you can't access that again.
Right? Yeah. So the sort of like, as far as the bank's twisted logic, the best kind of credit to have is a revolving credit, because it shows real sort of responsible credit use to be able to borrow, pay back, et cetera, right? There's no fixed payment involved. There's minimum payments, which means that if you pay it back, you're making more than your minimum payments, et cetera.
Yeah. So I was able to get 2 credit cards when my proposal was cleared from my credit report. Yeah. They basically offered them to me right away.
That's
which
wonderful.
Crazy. But the mortgage people didn't like the fact that I had this blank space on there. They needed a whole year at least of that. But you're saying at least 2 years
these
of that?
These days, what I'm
safe.
Getting, if you want to be
really
really
my credit
safe,
rating is like stellar. Right?
Now it would be. Well, now you know how to do it.
Well, no, but because I avoid debt like the plague
sure.
if I can, and I have only positive net worth.
Well, so
right?
so 2 trade lines, 2 years rebuild, and then another thing is like if you miss a single payment, even on a cell phone or something like that, start that clock over.
Really?
If you can be 3 days before the end of that 2 years. If there's one R on your credit rating, just start the clock over.
My wife wonders why I want to pay like the cell phone bill rate when it comes in.
Yeah.
Because it's because I don't want to have to go through any of that again.
Oh my god!
Just having to not that I really want.
Well, you'd probably be in good shape now. You could screw up once or twice.
I'd probably be okay now, but it's just like when you go through that and you have an R7 or R9, whatever it was I have. Which technically, means inability to pay debts as they become due.
Yeah.
Like, what if you may not need credit right away, but then, 5 years down the line, you're like, hey, I need a mortgage, and you can't get one.
Yeah. Yeah. And I mean, the other mistake that people make is just not reestablishing period, because, of course, they're gun shy at that point. And who could blame them?
Well, they want to live without credit.
Exactly.
And I get that.
I totally get it.
Yeah. People who don't want credit, because credit can be dangerous for some people.
Sure.
But they're like, I don't know, find a way to use it responsibly.
Yeah.
Find a way to just, I had a collateralized credit card, from People's Trust in Vancouver.
Yeah.
Like that's how I built it during the proposal. And then after, of course, people threw me credit
You're ready
cards.
to go.
There's a lot of ways to do this, but the key here is, and so you get people coming to you with a whole bunch of different situations, and you have possibilities for them. How many of the people that come to you do have to do a refinancing? Like, is this a common thing, or is it a rare thing?
I mean, in our business, I would say that a refinance is, I mean, if my colleague Chris ever listens to this, he'll like smack me for not knowing this, because he's got all these statistics.
It's okay. That's Chris.
I think it's, I would say maybe like 30 or 40% of our business is refinance.
Okay.
But very often, the other end of refinance isn't just to bail people out of debt, or, put that debt onto their mortgage, I guess is more accurate. The thing with refinance too is, to add value to your asset, right? So a lot of people refinance to put an addition on their house, or to throw in a new fancy kitchen or whatever. Sure. When I'm going through those files, like if I'm looking at it, I'm like, wow, yeah, like if $50,000 spent now is going to be $150,000 in value in 3 or 4 years.
Is that true?
Very depending on what you're doing, sure.
Yeah,
like sexy things, like and like kitchens, bathrooms.
So so there's a legitimate reason.
You're adding value to an appreciating asset at that point. So, and for those people who are in neighborhoods that can support that kind of increase, et cetera, then like it makes sense. But some people will refinance to do things that are totally frivolous.
Yeah.
or that I'll look at it and be like, this is not going to help you if you think that this $150,000 is going to like get you like double your money. It's not.
So you tell them this honestly.
I try to do my best.
But then they'll decide to proceed. And you're not going to say like, no.
But no, I mean, unless the person is proven themselves to be completely clueless.
Yeah.
And you know, like there's forms that we have clients sign, like sort of informed borrower forms and things like that, to just go over and be like, listen, like, you know, if a client decides to do something against my advice, providing that it's not like fraud.
Yeah.
And even if they do follow my advice, we still have them sign the same form, which is basically like, I understand the advice that's been given to me. And I've actually put forth forms to people that I consider to be high risk borrowers saying, listen, this was my advice in writing. You are choosing to not follow this advice. I'd like you to sign this form so that if it ever comes back, you know, if you do default on the loan and there's some sort of an investigation or whatever, I can say, look, this was not my idea. And I should say that I've only done that once, and I ended up actually divorcing the clients before they ever purchased, because they just would prove themselves again and again to be making poor decisions despite my advice.
Well, what I'm seeing is there's a couple of lines, right? Like there's a personal line, like if you wouldn't do something and maybe you wouldn't feel comfortable, but then there's a reasonability line, like, well, I don't know everything, and I'm not this person. They have a higher risk tolerance than me.
Exactly.
So you have to kind of ride those two lines, right? Like you can't always be like, I'm conservative and I'm frugal, so you can't do this. And
well, at the end of the day, like, you know, that's like what capitalism is supposed to be all about, right? Risk takers and investment and things like that. So you're right, though. Like that is a tightrope. I say, you know, I don't personally think this is a great idea, but I see what you're trying to accomplish. Yeah. And good luck to you.
I think that's hard real estate agents probably face that too.
Yeah.
It's like, I wouldn't buy this house, or I don't think it's a good investment, but then the people looking at it, they love this house and they want it to be their house. It's hard not to get your personal preferences involved.
Yeah, absolutely. And I mean, we're in on a personal or a professional level, we're in a pretty fortunate position that, you know, our book of clients at this point is so well established, and such a large percentage of our business comes from referrals that we kind of have like trust built in a lot.
Yeah,
you know, a lot of times,
nice.
If somebody sits down, you know, one of my first questions, especially to new buyers, is like, so like how savvy would you say you are in this world? Yeah. You know, and most people are totally honest and just like, I have no idea what the hell I'm talking about. But, you know, if somebody sits down and they'll be like, look, I've been buying and selling houses for years. Like my dad did it, whatever. And then I'm just like, okay, I don't know everything.
People trust you. You have a house in a residential area. You know, basically it's the only business, like in the, like until you get over to the next block. Like I walk by your business, which is a house, basically. Does somebody?
It was actually a convenience store.
It was.
I used to buy cigarettes there when I was in middle school.
So how long ago it was your mom that bought that place?
25 years she's been in that location.
Oh, in that specific location. Yeah. So I like the mural on the wall. What does it say?
The dead zombies.
Don't become a dead zombie. Is that what it says?
Something like that.
And this is a zombie. Like, is this true? Like, don't become a dead zombie, which really just means like be mindful and think about stuff, right? Yeah. It did like have somebody local paint that, or
actually, again.
Or how long has that been there?
That's been there for a few years now, maybe 5 years now. We're actually looking at updating it with something different at this point.
Sure.
But I mean, we're kind of loath to do that as well because we get a lot of good feedback on it.
Do people Instagram it and stuff?
Yeah, and I've had clients be like, yeah, you know, we drive by here all the time. It's really my kids wanted to come in here because because they see the dead zombies.
Well, I run by there and I walk by on my way to get donuts on Lock Street, and I was like, I got to check these guys out. So that's your main business is what you said. It is your business. So the new first time home buyers, the people coming in at the time to renew their mortgage, and then refinancing if they need it. But I mean,
and then I guess purchase and sale transactions.
Okay,
right?
so that kind of
same, but that's basically a purchase.
Yeah, and so that's your specialties.
That's what we do.
And that's what you
we
do.
We don't really dabble in commercial. We don't really dabble in any other kind of investment. I mean, we can source private funds for people, but very often we'll just kick that over to people that really know what they're doing. Same thing.
This is the Hamilton area. Like, how far do you stretch out?
I mean, we've done mortgages in St. John's. We've done mortgages in BC.
Really?
I mean, obviously,
anywhere in Canada.
The bulk of our business is here. But, you know, because our clients are pretty mobile.
So if a client one of yours goes over somewhere else,
they'll still come to us.
Of course, and you can handle anything in any of the provinces.
Yeah, I mean, I don't think we've done any territories yet. I think we can do
I always
Quebec.
ask about Quebec
I
because
think
they have
we can
totally different
They
laws.
do have different rules, and I know that mortgage brokers don't make very much money there.
Well, so yeah, none of the territories. Maybe
I don't
the
know about the territories.
Well, we're not.
You know what?
I
I bet we can't do the territories because of permafrost. So a lot
Interesting.
of properties in the territories wouldn't meet most lender criteria. So I imagine that most mortgages in the territories, I'm speculating, would probably be handled by local credit unions.
Yeah. Okay. That makes a lot of sense.
That would probably be
okay. But just give you guys a call. So so your website is
personalmortgage.ca. Yeah.
personalmortgage.ca.
Or the Personal Mortgage Group. No, it's
Should we
definitely
look it up?
personalmortgage.ca.
I know. I'm going to put the link in the show notes.
Okay.
Are you going to look at your business card?
Do I bring a business card? No.
And we can say where your location is.
Sure. We're at 233 Queen Street South on the corner of Queen and Charlton in Hamilton.
Yeah, which is like 2 minutes away from my house.
Mm-hmm.
And I don't need a mortgage yet, but we'll maybe get there.
Well, I hope to be top of your list
when my wife graduates from medical school. There you go.
There you go. Yeah. Well, it's interesting. I actually just finished a couple from Winnipeg. She's at residence at St. Joseph's, an anesthesiologist.
Oh,
so,
perfect.
yeah,
I think that's forever.
We've got a lot of doctors.
It's like the 30 years of residency. I think that's.
Yeah.
Well, there's some of them. I forget what the longest is. I think orthopedic surgeon or something.
Oh, is that right? Oh, that makes sense.
They were so long.
Yeah.
Like I can't believe it. And
they don't pay great while you're doing that.
That's
either.
it, right? But
I guess they're like. But it's funny because the people that I have that are, and I don't know if this is appropriate or not, but the people that I have the most significant debt are always physician or pre-med or resident physicians, because the bank's like, oh, you're in med school, here's a $200,000 line of credit.
Yeah.
We know you're good for it.
I can get
and usually at prime too.
Yeah.
Like usually at 3%.
Yeah, it's like here's all of the money. That's exactly what happened.
That's how the rich. I've got an aunt who's a professor at Notre Dame down in the States.
Oh man!
And she got tenure there years ago. Which I think she's a political scientist. And she was on the phone to me. I was on the phone with her the other day, and she's like, this is how the rich get richer. I just got a year off paid, like just because I published a book. They're like, here you go. She's like, I won some kind of award. They gave me a year off paid. She's like, this system is broken.
Yeah, seriously. Like it should be the prizes give a whole bunch of other people a year's salary. A leg up, exactly.
But then it's the same thing, doctors, it's just like, you've got somebody who's a mechanic and they're pulling teeth to get an auto loan, and then it's like you're in school to be a doctor. Here's $200,000 at the lowest interest. This is lower than a mortgage.
I know. It really is a messed up thing. Well, hopefully we can keep doing what we're doing to try to help people, the ones that are in need. But okay, so Boyce Collins, the Personal Mortgage Group.
You got it.
Personalmortgage.ca on Queen Street, Queen and Charlton in Hamilton. But, anywhere, just check them out. I'll put all this
Google
in the
it.
links. Thanks for coming by. This is great. If you like this episode, please subscribe to the podcast on Apple Podcasts or wherever you can subscribe to a podcast. Leave a review wherever you can too, hopefully Apple Podcasts, because that's where people go to look. If you're already a subscriber, please let me know what you think of the show. You can email me at bo@bohumphreys.com or tag me on Twitter in a nice post or share an episode at Bo Humphreys. It would really be nice to know who's out there and who's listening. Thank you so much for listening to this episode of the Personal Finance Show. Next week, my guest will be Eric Arnold, CEO of Plans Well.